to stock number 2, and a company bigger than Apple, by the way, in terms of sales, and another Dow component, Walmart. Company posting its biggest earnings miss since all the way back in August of 2015, but the stock didn't react. In fact, it closed a few cents higher. So what gives? Courtney Reagan is here now. How many times have you been at the NASDAQ today?
Twice today.
Twice today.
With a little stock exchange in between.
Yeah, you really
all the hot spots.
You've been on Seymour City Bike. Anyway, we're glad to see you. Great interview, by the way, with the CEO today. What's the takeaway after the day from what you heard from Walmart?
Yeah, Brian, I mean, I think the takeaway is really that the long-term strategy that Walmart laid out is still intact despite the weakness we saw in the fourth quarter. Yeah, there were categories that were weaker than Walmart planned during the holidays, but it's not really a signal of a fundamental shift in anything like consumer spending or Walmart's strategy of blending digital and physical together. Plus, the stock didn't get shocked with any big coronavirus impact like you've been talking about because Walmart's 400 plus stores in China have remained open. Some of the hours are a little tighter, yes, and sales are leaning more towards food, so there could be a margin hit there. Deliveries, though, are still happening. And then on the supply chain side, there really hasn't been a big impact so far. Here's what Walmart CEO Doug McMillon told me.
In the U.S., about 2/3 of what we sell is made in the USA. The other third doesn't all come from China, and we've been acting to buy goods that are already here, made in the USA, already in the country to try and offset some of the things that we might otherwise feel pressure from. So it's too difficult to call right now exactly what will happen in the quarter, but we've said because of what's happening on the ground in China, our Chinese business, not the rest of the world, we do expect to have some impact, but we're not currently putting that into our guidance.
It's not even in the guidance so far. So in the U.S., comparable sales did grow just under 2%. That was below expectation, but that's a comp that most retailers really are pining for right now. Plus, it's a continuation of really a multi-year growth trend for U.S. sales. Now, digital sales, those grew 35% in the quarter. Today, Walmart said U.S. e-commerce sales will grow 30% this year, and global net e-commerce sales will near $50 billion. The first time they've really given us a number like that. Walmart's online business has really become pretty sizable pretty quickly, both through acquisitions as well as through organic growth. And yes, Amazon looms large online, but Amazon has struggled with grocery. That's been Walmart's strength, in-store and with its growing online grocery business. So it's very fascinating when you talk about these two players because they have different strengths, they have different weaknesses, and if you look at total revenue, I mean, Walmart's is still way bigger than Amazon.
It's amazing. Courtney, stick around. Karen, I mean, I heard Kramer talk about it this morning. Everyone's piling on the actual number, but e-commerce was up 30-some%. Pretty incredible number.
It is, although it's expensive. It's expensive revenue for them, right? That's the margin issue that they're weighing as they build their business. Here's the thing that I'm maybe you can answer.
Yeah.
A lot of retailers have talked about, well, it's a shorter Christmas. Okay, which everyone knew, right? That calendar's been set for quite some time.
Totally.
And so was Walmart already fully the stock discounting it, even if the estimates didn't come down? Because they announced, same thing.
Yeah, I
after
think
Target,
so.
I would have thought.
I mean, when we heard from Target, I think it was a bit of a shock because they were sort of the first big box retailer to give us numbers. And Walmart never actually specifically broke out the holiday sales. They won't really even detail a big day like a Black Friday or a Cyber Monday, other than saying the season was relatively strong with some of these weak points. But it was funny because Walmart was weak in apparel, but that's where Target was strong. Walmart was strong in electronics. Target was weak there. So I don't even know if you can count that as an overall category. But I think because there was so much focus on this go-forward story that we kind of moved past that a little bit. And to your previous point about the expense of online growth, Walmart did say today that they expect the online losses to either be flat to this year or slightly lower. And so I think that was something that was sort of a bit of a relief to a number of shareholders, even if they're somewhat changing their digital strategy and how they're going about it because they went through that big period of acquisitions. They're not doing that so much, at least not right now.
But that was a genius acquisition of Jet. I mean, I think that you talked, what's his name, Mark
Lorry. That's right.
I mean, you look at a guy like that, and my wife worked in retail and consumer products, it still does for 20-some years. Brick and mortar retailing from a management perspective and e-commerce, you may be selling the same product, but the management skill set is completely different.
Totally.
It's a totally different animal. And they're learning, and they bought some of that knowledge.
Yeah, they did. They really did. And I think that is what investors have become comfortable with is some of the risks that Walmart is taking. They're sort of smart risks, and they're not too damaging if it doesn't work. For example, just like the Jet Black. I think it got a lot of headlines when Jet only operated for a couple years. It was only in New York and never expanded, and now it's shuttering. But Doug McMillan told me today, we actually learned an awful lot about conversational commerce. We knew that was a really high-touch business. It was always going to be hard to scale. We needed to experiment with it, and we figured out a lot of learnings. Check that box, move on. That's not a failure for us, and we know a lot of these things are going to stumble, but as long as we don't repeat those mistakes and they're not too expensive, they're worth it.
Look, we're lucky to have Courtney here breaking down all the retail that she does. It's amazing. These would be my two concerns with Walmart. One concern has been there for a while, valuations, trading close to 23 times next year's numbers. Big market multiple in terms of where the broader market is, in terms of where they are historically. It's expensive. The other thing, that a huge inventory build year over year. Now, maybe they're anticipating something, I don't know. But if they don't see the back end demand based on this inventory build, margins are going to get crushed. So I would be concerned here.
Well, I think Courtney really also hit on what to me is the key point. Everything we've just said is about a company. It's all about the multiple you're willing to pay for it in any company. We're willing to pay a higher multiple for Walmart. We're not going to give it an Amazon multiple, but we're certainly not going to give it a Walmart of yesteryear. So 30% where losses are either flat or they're lower losses on the business that gets them that multiple is so much more important right now. And so Walmart's gotten back to also competing on price, which they can destroy everybody. And it means that it's less important about the margins. It kind of sounds a little bit like Amazon, doesn't it? So I think this is all about multiple, and I think this is what you're willing to pay for Walmart. And it's clear investors are paying a lot more for it.
Isn't it amazing that Walmart's kind of become like the underdog in this story? I mean,
I know, it's funny.
Walmart, it's like, wow, they got to fight and scrap.